Hello guys and welcome back to the channel. So in this video we're going to talk about a very interesting topic, and that is how you can profit from the 2022 bear market. And I believe that we are in the opportunity of a lifetime, and it's going to be very different from what you think, because I think that the best case scenario for a certain type of investor that can happen is we have 2 to 3 years, maybe even 4 years of the market doing nothing. And if this would happen, certain people with a certain mindset would basically make their fortunes for their lifetime. And I want to share this with you so that you can, prepare for it, get a bit of a different thinking, and so that maybe this helps you in your financial decision. And by the way, if you like videos like this one, then make sure that you subscribe to the channel. And if you want, you can even support the channel on Patreon. I very recently read Peter Lynch's One Up the Wall Street, or whatever his book is called. And I have been a very short-term investor. And I was doing quite good as a short-term investor. I made about 26% on my portfolio in 7 months since I restarted the stock market in May 2021. And then I got my ass completely handed to me by the market from November to basically now, where I lost all my profit and I even went minus. And then I decided that I want to learn more about the market, and I want to divide up my portfolio and be more well-rounded and make very long-term investments that I don't have to touch. So I have a portfolio of about 100,000. It used to be 100,000, guys. It's a horrible market. Now it's like 90 something thousand from 120,000, but yeah, that's what we have to live with as stock investors. Anyways, as I started to take this viewpoint of short term versus long term. Oh yeah, and so basically I divided the portfolio into half short term and then half long term, and then I was going to diversify very prudently into very many companies. And then I came into this company called Palantir, and then I very responsibly invested 100% of my long-term portfolio into Palantir. And you can think whatever you want about this, you can comment whatever you want about that in the comment section below. Thing with me is that I own a quite big and expanding real estate company in South Sweden. We are part of building hundreds of apartments down here in this part of the world. And I will have, even if Palantir goes to zero, I will have a lot more money coming that will be available for me to invest. So I was basically very happy with Palantir, and I decided that the current money that is on the stock market is in its good place, and I will be adding hundreds of thousands of dollars to my portfolio. And then maybe I will still go 100% into Palantir or diversify more into Palantir and other stocks. But the point is that I noticed that the short-term trading is obviously riskier, but it promises a higher term profit. And I meant that I was short-term trading. It was 100%, I wasn't day trading, but it was 100% technical trading. So I was buying companies that I knew nothing about, but I was just looking at, their trends and, like where they are in the trends and, the volume and certain other indicators. And based on that, I was buying. And when the market was going up, we had the crazy bull market, like post-COVID. Obviously, my portfolio was doing very good. I was hoping that in a bear market, the strategy would work the same way, but clearly it doesn't work, right? So here's the thing. So there is an opportunity cost to short-term trading. And this is a very interesting concept, because let's say that if you're short-term trading, jumping in and out of stocks, and you would be surprised that about 90% of the people lose their money. But let's say that you're in the 10% that is super smart and you do make money with short-term trading. But what is the money that you make? So I would say that if you invest in an investment fund, you can, index fund, then you can maybe expect a 10% per year return, right? Let's say that you do very good stock research and you pick stocks, you pick certain stocks that you believe it, and you just own them for 5 years. Let's say that you can expect a 20 to 25% return per year, right? So, but you realize when you invest into an index fund, you have zero work, zero research, zero thinking. You put your money there, you go to sleep, and that's it, right? And when you do the stock picking, you do a few hours of research on a company, you watch hours and hours of YouTube videos, then you make a decision. In my case, it was, to buy Palantir. So let's say it was 30 hours. Maybe for you it's enough with 10, maybe you want 100, but let's say it's in this range, okay? Again, you don't have to do anything more with this stock for the next 5 years. You just have a thesis that, okay, my thesis is that Palantir is going to grow 30% per year. Their, operating margin is going to increase. They're going to stop with the stock-based compensation. The market is going to look at them like this. And then every quarterly report, you read their quarterly report, probably 15 minutes, and you watch the investor call, probably another half an hour, 1 hour. And as long as you're like, okay, are they still growing? Check. Are they cutting down the stock-based compensation? Check. The operating margin going up? Check. Then you go to sleep again. And then with this little extra work, you can go from, 10 to 20 to 25%. So here you earn 15% with, I don't know, maybe 100 hours per year work, maybe less. For probably many people it's less, okay? But here's the crazy thing. So then you take the short-term risk, short-term trading, where you are very likely to lose money, but let's say you're this lucky 10%, and you make 40% on your money, right? So you go from 25 to 40%, but what is the time that you invest into this? Because when I was short-term trading, I was every day minimum, I wouldn't say minimum, but around 1 hour dealing with the stock market. Then I was, like reading about strategies, back testing strategies. That was also extra time. And then, suddenly your hours of investment, triples and quadruples, but your return is only going like 10% up if you're in the lucky 10%. And I realized it was very interesting because recently, because of my business, I came in contact with some very wealthy individuals. It was so surprising for me that they weren't wealthy or, you didn't know how wealthy they were. And then I actually was going to do business with them and, I Googled their name and I found that, they sold properties that they owned and they had tens of millions of dollars that I had no idea that they even had. And then I started analyzing, okay, in their life, they did nothing special. They just basically started a business, they stuck with it, and then the overflow of money, they invested in real estate, then they stuck with it, and they made it to tens and tens and tens of millions of dollars of net worth. And I was like, oh my God, the short-term thinking is very destructive, And then I realized that for so many of us, let's say that you have an income of $100,000 per year. And again, you have a portfolio that you can invest, which is $100,000. So you invest $100,000 and you earn $100,000, right? So are you better off 4xing your time spent on the stock market, going short term on investing to earn, instead of $25,000, you earn $40,000, which is a $15,000 increase? Or are you better on focusing on your income, focusing on your business, and instead increasing your pay from 100 to 200,000 or 300,000? Because in my case, for example, because I own this real estate business, I realized that that's like, I really need to be conscious of where I put my time. And I realized if I can increase my earnings from 100,000 to 300,000 and then earn 20% on the 300,000 instead of, 40% on the 100,000, I'm way better off. And this was a very big shock to me, right? So again, it's the same concept here that, what I mentioned. And then, who do you know in society that are long-term thinkers? You have Elon Musk, you have Jeff Bezos, you have Warren Buffett, you have Peter Lynch. It's so funny because if you look at Warren Buffett, he never timed the market. He was just freaking buying. Even on bull markets, even on bear markets, he was just accumulating and buying very good companies, Elon and Jeff, they're a bit different. They were basically sticking with their company and, not caring about how much profit they take out about the company. But the point is, like, this is the results that long-term thinking gets you, And who do you know that are short-term thinkers that The only people that I know is my sister, who is, I'm sorry if you're watching this, but it's true, like, she wants to start a new business idea every 3 months. The business idea that it's not as good as she thinks, and then instead of sticking with it, she goes another way. Then all of us have like this uncle or, friend who is into this new business every year, and they just never get anywhere because they think short term, right? So I think we can agree that long-term investing is way better and it's a lot less work and, it's just way better. So if we decide that we're going to invest as long-term investors, then what do we want? Then I would want, because I actually, since I started long-term investing, I love that I don't care what happens to the stock price. I bought Palantir, my cost basis is $11.75. And every time when I open my trading view, I'm amazingly happy if the stock goes up because I made money. And if the stock goes down, I'm even happier because I know that I'm making 100,000 this year, hopefully 200,000 next year, hopefully 300,000 next year. And if the price stays low, I can just accumulate more and more and more shares. So as opposed to being a short-term trader where I was nervous every day, if this is going to hit my stop, how much this is going up, you're happy no matter what happens. So again, as a long-term investor, if you start getting into this way of thinking, then you realize that it's way more important that you increase your income so you can invest more per year into stocks than that you focus on increasing your stock returns from 20 to 25% or 25 to 30%. So here's something that is very, very interesting. So if you're a long-term investor and you know how to analyze companies, by the way, on the Patreon page, I post every company. So far it's Zoom, Palantir, Netflix, Tesla are the companies that I cover with my valuation. And it's $5 a month, and I don't care if you sign up and cancel straight away and you just take the tables. But the point is that, if you know how to do valuations and you know the products of the companies and you trust the companies, then you choose, okay, you say Palantir is a company that you can hold for 20 years as long as they, execute. I believe Tesla is one of those. I believe, as controversial as it sounds, Netflix is becoming into this territory that it will be a company that you can just own for the next 15 years and you can just forget. So once you pick the company, this is the funniest thing. So what's the best case scenario for you as far as the stock price? The best case scenario for you would be that the stock does nothing for the next 3, 4, 5, or 6 years. And let me tell you why. Because, the value of the company is the value of the company. Sometimes the market doesn't recognize it. I believe this is the case for Palantir, right? So if Palantir is $10 this year, and you earn 100,000, and I invested that into Palantir, right? Next year I'm going to earn 200,000, and probably 100,000 I will be able to invest in Palantir. So is it better for me that the price is at 20, or is it better for me that the price is at 7? For me, it's better that the price is at 7 because now I can invest 200,000 into Palantir. However, the normal people, this is where you really have to know what you're doing. You're going to be crazy, but I'm going to show you a real life example when this has happened. But you're going to be crazy emotional. Your wife is not going to be very happy. Your friends are going to call you stupid that you invested into this and nothing happened. But you just gotta stick to it. So then let's say year 3, now you increased your income to 300,000 and you can invest 200,000 into Palantir. Then what is better for you? Is it that the stock went to 30% or $20 and you can brag to your friends that you had a 50% return on your 200,000 already invested? Or is it better that the stock is now at $6 and now you can accumulate another 200,000 shares of Palantir, right? And then as the time goes by, the market will slowly recognize, as long as your thesis was correct, and then the stock will represent the correct value, right? And as I mentioned, I read Peter Lynch's book. Actually, I finished it yesterday, I believe. And he even said that his most profitable trades that he has traded was those trades, the one where he had 10 beggars, was the trades where he was sitting 4 or 5 years without any movement or maybe even minus in the stock. And then after that time, the market realized what the stock was, and then he suddenly had a 10 bagger. And if you want a real-time example of this, then I invite you to look at Tesla stock. And there is only one investor that I know who has invested $200 million of his own money, and that is Ron Barron, a legendary investor. So he invested in 2013, we don't know the price, but he invested around $200 million, right? And here's the crazy thing. Tesla for the next, look, this is 2 years after invested, the stock was back at the same price. Then this is 4 years after invested, the stock is lower than the price that he invested. And this is about 4 years after invested, the stock is at the same price, But I remember him in the TV interview when he said, I thought it was a good deal when they were producing 20,000 cars a year. And in 2016, they were making, I don't know, 200,000 cars per year. They showed that they're profitable. You know, the Model 3 came out. It was a completely different company, yet the stock price was the exact same. And then, you know, something happened. Oh, look, it even 2019, this is 6 years after invested, the stock pretty much came down to the same thing. And then the stock suddenly blew up. And we all know what happened to Tesla. It's basically legendary. And his $200 million that he invested is today worth over $6 billion. And he's not selling. So this is a real life example of what an amazing stock is. And he did his research in 2013, guys. He made one move. Okay, one move that changed his life. I mean, he was probably very rich by that time. And that all he did was just keep checking that is the company growing as he thinks it was going? Is the company moving the way he thought? And he made this return. Now try to beat this with swing trading, you know, being there at the stock market every hour of every day and, you know, trying to jump on it's impossible. Don't even try. And I think it's not worth it. So what is the moral of this video? Invest in the long term. Focus on increasing your income so you have more to invest. This is how you make money in the 2022 stock market crash. Know how to do valuations. Watch my videos, watch other YouTuber videos. It's just find a simple way how you know what's the worth of your stocks. Join my Patreon and subscribe to this channel and accumulate shares over time and repeat this process and flourish and prosper. And I will see you on the next video. Good luck to you and may the 4th be with you. Bye bye.